I'm sure everybody has seen the memes going around about the container ship that's caught blocking off the Suez Canal. We're going to talk a little bit about the economic implications that this has. If you've been watching the markets, we saw it with oil prices shooting. We've seen it with a little bit of a sell-off scare this week. It's definitely having its effect on the markets, but I want to talk about an opportunity, and chaos creates opportunity. Let's talk at the end of the video about a company that could benefit very heavily from this event that's happening. They've kind of been seeing some benefits already, but definitely going to see some benefits in the future. With that being said, if this is your first time here, my name's Nick. Welcome to Ways of Wealth. Before we get into the video, I'd like to ask you a huge favor. If you learn something new or you get some value out of the video, please hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button, turning that notification bell on. I would definitely appreciate that. The Suez Canal, if you're not familiar, it basically connects Asia to Europe. Instead of going all the way around Africa, they cut a canal right through. It cuts down transit time. It increases globalization. It makes shipping 1,000 times easier. Moving via oceans, probably the most cheapest, economically efficient ways to do things. So this is definitely a major artery to the global trade. And as you can see, 12% of global trade moves through this canal. 30% of it is global container traffic. Those are moving consumer goods, clothing, you name it, whatever you put in those containers are moving around the world. 52 ships move through this on a daily basis. This canal goes all the way back to 1869. They obviously saw this opportunity for globalization going back, over 100 and some odd years. So it's definitely a huge artery. March 23rd, a container ship named Evergreen became lodged in the Suez Canal. Each day the canal is closed, it disrupts an estimated $9 billion worth of global trade. That is absolutely incredible. My understanding as of this morning on the 27th, when I'm filming this, there's over 300 vessels that are waiting to go through here. Some have diverted to the south tip. They call it around the Horn of Africa. Vessels that are destined to North America from the place, in the Middle East or Southeast Asia. This could add another 2 weeks to the transit time. So just further delays that we're seeing in the supply chain. We talked a little bit about this in a video that I did before with the thumbnail trouble ahead. I'll link it above. Basically, there's so much demand right now for container traffic, for consumer goods. We'll touch on this a little bit later. But because of this demand, getting a container is very hard to do, and the price has 2x or 3x since that point. We have different types of commodities that are moving through here, whether it's dry bulk, the containers that we talked about before, and oil. Oil reaching above $62 a barrel on Friday definitely was because of this event. If the oil blocks off there, obviously the demand will increase, supply drops, and the price goes up. To give you an indication, and we'll touch on this in just on the next page, but to give you an example of how big this ship is, it's bigger than the Empire State Building. If you were to flip the Empire State Building down, lay it up side by side, this thing is the same size. There's a ton of goods that are moving on it. And let's go into a little bit further depth just to give you an idea of how big this is. So Evergreen, it's built in 2018. This thing's over 1,300 feet long, 194 feet wide. This thing is absolutely massive. At its full weight, it's 240,000 tons. Massive. Okay, let's look at this. 50% or 50 feet of the ship below the water, and then on top of that you have 150 feet that's above the water. This thing is an absolute enormous thing that's helping move vessels around. I know why they're becoming bigger and bigger is the ergonomics or the economic efficiency portion of it. So if you can get more containers on, you'll burn less fuel, you'll be able to, save the environment. So it's definitely a good thing. But one of the implications, one of the negative effects that we're having is that these things can be absolute wind tunnels. So 30 kts wind on the beam. These things are basically huge sails in the air. I think there will be a further investigation as to what happened, but it could be a little bit of wind. It could be a little bit of human error on the captain's side. Like I said, they'll break that down. They'll talk about that a little bit further. Another thing that I found really interesting is a site called MyBookie. They're having a little bit of wagers right now as to when this thing will be unstuck or dislodged from the wall. The date on here is April 5th. Now, the reason that I find this so interesting is the fact that these bookies, they normally have a little bit of scientific knowledge behind as to why they think it's that date. Now, as of recording this, it's the 27th. They're predicting that it could be the 5th. Now, the odds are split in both ways, but the 5th seems to be a important date here. I think they're waiting for the tide to rise. I think that was supposed to start happening this weekend. I'm not sure if it's seasonality or what, but basically if they're predicting the 5th on here, that means that it could be another over a week of potential delays, and 52 ships per day times an over a week, that means a lot are piling up. 300 are already piled up to this point. The economic implications, we're only at the beginning of knowing what the true potential damage or repair is going to be needed to move this forward. They have, will it reach Rotterdam by April the 17th? So get it dislodged by the 5th. And then still need time to check the ship for any, damage and make sure that it can make it there. But that just shows that there is time still needed here. So this event is nowhere near done. From there, I found a site called Harper Peterson, and they have the Harper Peterson Charter Rates Index. So this reflects the worldwide price development on the charter market for container ships. The Harpex was originally developed in 2004. They adjusted it in 2011, and the charter rates are assessed by weekly basis, 6 to 12 month fixtures, and actual business concluded in the market each week. Let's take a look at what that's reading right now. We can see that this number is absolutely spiking. The last time that it peaked was 2005, 2006. We haven't really seen a huge spike in demand for global trade. We're definitely on that way right now, and it looks like there's no end in sight. So when you look at this number, it's basically pricing out what it's going to cost you to book a vessel. So because of this event, because of the fact that a little bit, giving you a little bit of a run up and talking about that video that I mentioned before, the economy right now is based so heavily on consumer goods. A lot of people in lockdowns, they can't go out to restaurants, they can't go on vacation. Instead of spending that money on those types of things, on plane tickets or hotels, they're spending money on renovations. They're spending money on backyard furniture in the house. They're spending money on consumer goods. This is creating such a demand for these manufacturers in Asia. They can't keep up. There's a lack of raw materials. There's a lack of containers availability. This is driving demand. It's reducing supply heavily. Rates for the ocean containers themselves have 3x'd in the past 6 to 8 months. This industry is absolutely booming right now, and I think this kind of leads into where we're going in terms of where the opportunity is. And this company was recently IPO'd on the New York Stock Exchange. They IPO'd at the end of January, and the company name is Zim, based out of Israel. We'll talk a little bit about the performance so far and where this company could go. We'll also take a look at the chart. But there was an increase of 168% in adjusted EBITDA versus year-to-date 2019 to 2020 here. Outstanding net result, reaching a net profit of $524 million in 2020. These companies are not known to be profitable. We saw what that chart had done since 2006. The Harper Peterson index had really dropped off the map. These companies have really struggled over the past 10 to 14 years. They've increased their margins. They have a strategy that is in place. We'll talk a little bit about the consistent earnings growth. So this is a quarterly view of what the past 2 years looks like. We see the massive spike in Q4 of 2020 and the massive increase that they've had in EBITDA, over $1 billion, with the net leverage ratio going down. So they're going to come to a point in Q2 where they have absolutely no debt, which is absolutely incredible for this industry. I cannot phrase that again. Moving into a little bit of the nitty gritty, free cash flow has increased by 106%. You have revenue increasing at 21%. The freight rates have increased last quarter at 21%. I think it's a little bit higher than that, but it just depends on the lane. I'm thinking more specific inbound into Canada. Volume has increased. Debt has heavily decreased. I had 1.8 billion down to only 251 million. Cash has decreased a little bit, but not too worried about that. Still negative on debt, but I think that that's something that will increase to the positive side. Significant improvement. We see numbers moving up in revenue, EBITDA, and net profit in particular. I think what I want to do is break down a little bit about the where they see the industry going and catching up to lost revenue. Current record high contract rates expect to last to spring 2022. So this gives us a year of growth that they continue to see this high number going. Shanghai Container Freight Index and the 10-year charter rate are very similar to the Harper Peterson that we talked about before. These numbers are spiking off the charts. A lot of places are not coming out of lockdown. We will continue to see an increased demand for consumer goods. I think that this is leading into a better 2022 than they have 2021. So that's a type of company that I would definitely want to invest in. Let's take a look at the chart. I know it's very fresh, down 2% on Friday amidst all of this stuff that's going on. They reported last week. One of the things that I want to bring up is they're so new to being a public company that I think a lot of investors were turned off by the way that they didn't have the appropriate questions ready to answer, or the appropriate answers. I think there was a lot of negative feedback in terms of that. But like I said before, relatively new public company, never done before, but specialists in shipping, turning very profitable in an industry that's very profitable. I'm a big fan. It's up about probably 116% since IPO. But on dips like this 2% dip, it definitely leaves a huge opportunity to buy. I'm definitely looking to add this if I can see it drop down under this sub 25, but definitely do your own due diligence. Make sure that you agree with me when the stock does drop 20%, hypothetically. It's only your own conviction that's going to keep you in that trade. But let me know what you think. Is there other names in this sector that you're playing based off this news? Do you like this Zim pick, ticker symbol ZIM on the New York Stock Exchange? If I haven't mentioned it, do you like it? Do you not like it? Let me know down in the comments. But hope you enjoyed the video. That's all for this week. Again, if you learned something new, you got some value, hit that like button for me. And if you haven't already, consider hitting that subscribe button, turning that notification bell on. Again, appreciate your support. As always, have a great week in the markets. Happy trading.